You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are watching, listening to the Financial Survival Network. I'm Kerry Lutz. Well, hey, you know all the problems out there. Inflation is booming, no signs of letting up, and everything's getting more costly. Geopolitical risk, you name it. It all seems to be heading towards a perfect storm. Well, if you're like me, small business owner, and basically investor for my entire life, you're going to want to hear what my next guest has to say now. His site is wealthwithoutwallstreet.com. His name is Russ Morgan. Russ, you are looking at helping people to get through these hard times. What do you think the number one thing you can do, whether you're Joe Sixpack, Steve Chardonnay, or a small business owner, whatever, what can you do to help you accomplish your goals and to lower the risk of this current economic environment?
Yeah. Thank you, Kerry, again, for having me back on the show. I know I was on, I think it was September of last year, 2021. And yeah, the conversation is the same, but it's more heightened, I think, because of what you just said. There's a lot of fear out there. There's a lot of, like, looking back now, is this the same thing that was happening in 2006 and 2007 before we saw the real crash of 2008? And I think you see that. I think you see, Credit Suisse losing 50% of its value, very similar to what we saw the banks doing in 2006 and 7. And the inflationary environment's a little bit different, even though we saw interest rates rising, just not as quickly as they've been rising over the last 6 to 7 months here. But I think the solution, Kerry, is always the same. It's you can't invest in things that you don't understand, can't trust, that you're hoping on a return in the future. You can't live off fixed income your whole life without it being impacted whenever the government makes changes. So you and I we can't affect inflation in the traditional ways, but there are some creative ways we can do to mitigate that. And I'm glad to go through those today with you.
Okay, so right, it's risky. The environment's risky. So all you can hope to do is mitigate the risk. You can't eliminate it. So how do you mitigate? What are you doing?
Yeah. So I've been investing for cash flow for the last 2.5 to 3 years very heavily, and not in just one specific class. We get the question all the time, what's the thing I should invest in? I just got off the call with a vet. He makes $1 million a year. He recently sold his practice actually to private equity, has a $10 to $15 million nest egg sitting in the bank, and he's still getting paid well by the practice to keep in there. But he's looking at that balance going down every month as he's starting to pull money off of it, because what he's getting paid now is less than what he's spending. And he's wondering, what do I do? Is the investment that the advisor that I've been working with going to pay off? He said, is this going to earn me 7%? But I don't see that today. Well, passive income greater than monthly expenses is financial freedom. If the assets underlining that income flow are down 10 or 20%, that doesn't really matter unless you're selling it, right? So if I own a ton of rental property, for instance, which I don't, because that's not who my investor DNA is, but if I did, I wouldn't really care if my rental property was worth 20% of what it was 6 months ago, as long as my cash flow is the same. And to be honest, I see rents going up in the real estate space, not going down. So I would say that we're probably winning if that is our investor DNA, and that's what we're doing.
All right. So what are some things that you're putting money into to keep this cash flow going?
Well, I've invested in a lot of different things. So I'm going to put a caveat there. Don't follow what I do just because it works for me. Neither should you follow what Kerry does because it just works for him. If you don't have passion and interest in what you're investing in, you're going to put a little amount of money there and it's never going to pan out. So, but what am I investing in? Well, we have a short-term rental portfolio, Kerry. We have about 26 units. They're not vacation properties. They're not mountain properties. They're properties actually that the everyday average Joe uses when they're traveling for work. They're traveling for kids' travel ball. Their house is being repaired. It spans a lot of different demographics. So that way we're not ebbing and flowing with the travel market as much. We're invested in ATM machines. We're invested in crypto mining. Now the price of crypto is obviously significantly down, but the mining continues to produce pretty well. We've invested in e-commerce businesses. I think e-commerce is a space that is going to continue to grow. 2020 gave us a different outlook on the way we purchase, and that continues to grow. One of the things that we do that I like the most, to be honest, is we buy and sell raw land, not the kind of land that you and I want to own for hunting or for vacationing on, but little tracts of raw land in the middle of Nowhereville, Arizona, and Colorado and New Mexico. We've built about $22,000, $23,000 a month in cash flow just off notes off of that. So there's a handful of the things. You could go on our website. There's a passive income report. You can see all the things.
So these are very kind of non-traditional investments, shall we say?
Non-typical. How about that? Right? I mean, land is as traditional as you can get. Money in the ATM space is typical you can get. Obviously, Bitcoin and Ethereum is a different type of money, but it still is a currency that could be traded for goods and services. So we look at non-typical type things. We look at things that we personally can have either influence in, either by running the business itself or have an operator in that can do it at a high level.
All right. So is there anything you're looking at now that is really off the beaten track that nobody would think about?
Man, I would say the one I mentioned last is probably the thing that gets talked about the least and is understood at the smallest level, which is flipping raw land. And I just got back. The reason it's probably relevant in my mind is not only do I get a report on it from our group who manages it for us, but I just got back from a conference in Atlanta where I was around 100 people that were doing this as their side hustle, if you will. Some of them that's their full-time job, but it's hard to say full-time because they work like 5 to 10 hours a week in it. But they're producing, $10,000 to $50,000 a month in cash flow. And I would say for most people, that's probably outside of the peer view of what they normally see, and actually maybe has the greatest opportunity for cash flow as well as least impact as we deal with all of the craziness in the markets right now.
Oh, it sounds pretty good to me. So raw land, any particular markets you should be looking at?
If you want to really dig into this, please don't take my advice on it. I'm not the expert. I'd go to the podcast, The Art of Passive Income by Mark Podolsky, the Land Geek.
I know Mark Podolsky, personal friend. Yeah. I know the Land Geek well. And certainly that is one way of going about it. He's been on the show a number of times. Have him back on, in fact. So raw land, but it doesn't produce any cash flow until you sell it. With the economy going down, it might not be as advantageous as it was just a few short months ago.
Well, you would think that. And again, I don't know, Kerry, if you've ever done it. So that would be your experience could be different than mine. But I'm not experiencing that right now. Our land business is doing well. It's harder to acquire raw land right now because people are holding on to it because it's a physical item, very much like the precious metals out there. So we're seeing the prices go up, but also other people are wanting to acquire it too. And what we're not doing is we're not trying to sell it for cash, meaning I'm not trying to buy it for $5,000 and sell it for $25,000 in one fell swoop. We're buying it for $5,000 and we're turning around and selling it for $500 to $1,000 down, $500 a month for the next 60 months kind of thing. Gotcha. And what we're seeing is that's still rocking along. We're not seeing a whole lot of impact on it.
Understood. So, I like the concept of it. You don't have tenants, no toilets, tenants, and repairs and all that, and the risks are much more quantifiable. So I get that. So, economic cycles come and go. How long is this going to last?
How long is the economy going to be down? Is that the question?
This down cycle in the economy, how long is it going to last?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper gold early stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Man, if I only knew that, boy, we could be really rich, couldn't we? Here's my limited opinion. I see interest rates rising for the next 12 to 18 months and then coming down sharp like they did last time. And this is not, really that educated of a guess, because all you have to do is look at who owns the commercial banks. And then you look at who the commercial banks own the Federal Reserve. The Federal Reserve is a function of what the commercial banks want them to do. The commercial banks make less money in high interest rate environment, contrary to popular belief. They make way more money when interest rates are low. So right now, the commercial banking world is hurting. Hence the reason why I was telling you just Credit Suisse as one is losing money hand over fist. Well, they make a lot less money in higher interest rate environments. So they will be bringing down interest rates soon. And when they do, obviously, it'll feel better to us. But all we're going to do is prolong the pain for another bubble to burst. So I don't know how long it'll last. It may be 18 months. It may be 36 months. It'll be rough for those people who are out there unprotected, who's just been, hoping on the market to help them. And I think that the way that you avoid that is that you get in environments where there's people that are giving you insight to what's happening, and you're learning from the education of those, and you're making investment opportunities that produce cash flow on a monthly basis. I was just talking to a guy, and he was questioning whether or not investing in real estate or investing in businesses or land or ATMs or short-term rentals or whatever, how is that any better than the stock market? Can it just go down in value? And the answer is absolutely. Everything can lose money. But the way you can make an evaluation of an investment when it produces cash flow is that the first month it doesn't send you a check the way it should, then you raise a red flag, right? And that could be in month 3, it could be month 33. But the problem is in the traditional investment world is that we don't get checks. So if it's down 5%, if it's down 50%, we could call our advisor up and say, it seems like something's wrong. And what they are going to say is, hey, by the way, Kerry, you don't need the money today. It doesn't matter. It's going to bounce back up when the markets turn. We'll be good. Well, maybe it is, maybe it's not. And you don't know until you get to the point way down the road where you actually need the money to determine out if it figured out. So I would say the best way to avoid this is getting into cash flowing assets as quickly as you possibly can that match your investor DNA. Okay,
I like that. So how do you determine what your investor DNA is?
Well, we have a tool that we built that does that. It's a match of a couple of different things. We use personality assessments. We use basically the way that we look at the world from a work standpoint and habits, and then we match it up with some of the top and passive income strategies out there and say, okay, here's how you're going to see this from a pro standpoint. This is what it's going to look like. So if I'm an extrovert, I'm someone who likes to be hands-on and involved. This investment is going to allow me to do A, B, or C. And maybe it's going to allow me to engage in that. Maybe it's not. And then I'm going to look at the cons of it. And I'm going to say, how much detail is it going to be involved? So if I'm a high extrovert, probably low details, low conformity to a process. If I have to be involved in any shape or form, I better find a partner. I better find an operator, somebody who has that. So we match basically people's personality style with investments instead of going back to the old risk reward analysis that the stock world used to use.
Yeah, which really is of limited utility. So
100%.
Risk reward But that's dependent upon your investing style, right? Your
Correct.
investor DNA, how much risk you can tolerate, and how much, all of those factors, right?
Yeah, I mean, you need to know what your investor buy box is, right? You need to know what the ideal outcome looks like, so that way when you invest in things, it produces as many of those criteria as possible. I just don't think people have ever considered that. We just released a podcast on our show about building your investor buy box, and that was one of those things where we were breaking down the components in it so that someone would see that it's a lot more than just rate of return.
Sure.
Because typically that's the way we've chosen every investment up to this point.
What do you think the biggest mistake people make is when investing?
One, I would say investing for rate of return, not understanding enough about what they're investing in, and not having the outcome or the ability to influence the outcome.
Mm-hmm. So don't just chase yield, or as we call them lovingly in the trade is don't be a yield whore.
Well, here's the thing. I was just with this group of land investors, and we were giving a talk to the top 20% in the room. And we were talking about, hey, their biggest problem that they have in their land flipping business is they're running out of capital. And so I said, all right, you're talking to an investor. I'm an investor. I'll invest in your business. What terms do you want to give me? And they're like, as low as interest rate as I can give you. And I was like, is that right? And they go, yeah, that's exactly right. I go, okay, let me break this down for you. I'll let you give me 6%, but you have to pay me weekly. Mm-hmm. Are you good with that? And they're like, well, I don't know about that, because then that's going to affect my cash flow. I don't feel good about it. I said, here's the other option. You can pay me 20%, but you don't have to pay me to the end of 3 years. Which one do you like better? And they're like, oh, well, I like that, because we can set up our note payments with the people we're selling the property to, where they're paying us over 36 months. And I was like, see, interest rate isn't always the key factor. Right. It's the payment. And it's the same way people make the mistake. They think they're going to become financially free, and they mistakenly believe that debt freedom equals financial freedom. And they start trying to pay off their mortgages, and they tie up their cash flow in places they can't access it, their 401ks, their IRAs, all of these things. And they make those mistakes that can't help them actually get any closer to financial freedom, but in essence, give them further away.
That's really cool. Never quite looked at it like that. But yeah, obviously, you're renting money, and it's all about time value of money. And but bringing it to real life, it's one thing with an MBA, and he's got his spreadsheet and all that. But your system there really brings it to real life.
Well, what I'd say to that is, hey, there's a lot of financially educated people out there, people that have studied the markets and have studied the ups and downs and the cycles way better than I have. I was a former certified financial planner. I did a lot of studying in my day, but it really didn't get me anywhere, except when I was in 2009 telling my clients, hey, we're only down 25% instead of 50%. So that's where that got me. So I've long since given that up. But it's about access to cash. So most people make the mistake of not putting their money in a place that they can access it. The second step is that then they take it and they invest in things that they can't touch, that don't produce cash flow. Well, right. I'm looking for velocity. I'm going to treat my cash flow business just the same way that Walmart treats goods in the back door going out the front door. They want them to go as fast as possible. Sure, they want a good markup, but if they marked them up so high, what would happen? It would slow down the velocity of the goods going out the front door, which would then either they'd pile up in the back door or they'd stop bringing them in. We need to think about our money in that same way. Where's our dollars coming in, and how quickly can I get it going out, going to work, producing more cash flow, bringing more dollars back to me?
Right. All right. Well, I like your attitude here. I'm glad that we had you back on the show, Russ. People want to find out more about you, just give us your website again, please.
Yeah, if you want to find out more about us, you can go to wealthwithoutwallstreet.com. If you're interested in knowing what your financial score is to see how close you are to financial freedom, you can type in wealthwithoutwallstreet.com/quiz. And we actually have a financial freedom analyzer tool that we've built that can help you get closer to understanding where you stand, at least in relationship to passive income being greater than your monthly expenses.
All right. Hey, if you've got a question for Russ, shoot me an email, kl@kerrylutz.com. The link to his site, you'll find it in the show notes of this interview on financialsurvivalnetwork.com. And while you're there, sign up for your free newsletter. Russ, been a pleasure. Thank you so much for stopping by. We'll talk to you again real soon.
Thank you so much.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.